Good evening, everyone. Welcome to tonight's BullCharts User Group webinar. Getting underway now. And please remember our general disclaimer. Any information presented or discussed tonight is only opinion, not advice, and should not be acted upon. So Peter is a member of our BullCharts User Group community. He's been in a few sessions in recent months, and he volunteered a month ago to show us how he uses BullCharts, and I thought that'd be good to see another variation on the short list of volunteers we've had in the last few months. I'd like to make Peter welcome, and Peter, I'll hand over to you, and Peter, we'll let you get underway. Thank you kindly.
Okay, thank you very much, Rob. Excellent. Okay then, well obviously that's the BullCharts software coming right smack bang at you.
Very good.
Okay then, I've been a BullCharts user for a number of years now. And I suppose I'm still using BullCharts because it was one of the few packages at the time where the user could make a lot of modifications. We can modify the indicator parameters. We can actually make up our own indicators. We can create our own templates. And more importantly, we can create our own scans to find price events or things that really interest us. I'm a discretionary trader. Even though all my trades are managed individually, I also keep an eye on the market, as you can see on this chart, where I manage my portfolio heat. Now, portfolio heat is mainly my downside exposure. So if you look at the far right-hand side of the chart, we can see that the index has gone down, or the market's gone down for a couple of days. And there's a little number 2 there. Number 2 means I've sold all my losers already. And I've tightened the stops on a lot of other trades. In other words, I'm starting to reduce my exposure to the market. Now, I'm very much a short to medium term trader. And as you've had a couple of minutes to view this chart, you can see where the market more or less tells me what I should be doing. After that market dump back here in June, I started looking for reversals around about this time. As the market continued higher, I'm looking for more breakouts. In other words, start more trades, get more involved. Now, I'm doing the opposite. And if the market goes down further, I will then start looking for reversals or buying that dip if the dip is still there. Okay, so that's just a little teaser for what my charts might look like. I've decided to go to a blank screen and recreate my template. This should be interesting for the newer users of BullCharts. And later on, when we look at the scans, we'll be able to, that should be of more interest to, say, the more experienced users. So right now, I'm going to go to another chart. And this is merely a chart at random. And I'm going to flip over to my presentation slide. So yes, I'm very much a discretionary trader. And it's important that I give you some context as to my trading style to be able to make you maybe a little bit more understand why I set the charts up the way I do. Without that context, it might be a little bit difficult. So I'm very much a chartist, not a technical analyst. I do have some technical indicators on my charts, but they're more or less hidden in the price data. I'm a firm believer that price moves in both impulsive and corrective movements. Okay, we can see it on the chart here. Price impulsively moved higher, then we had a really long corrective, and then it moved impulsively higher again. We had a smaller correction this time. Again, another little impulse, more correction, more impulse. And we've had a rather large correction in this particular stock at this particular time. And that leads to the next impulse. Okay, so my role as a trader is to be looking for the next impulsive move on all these charts. So that means I have to go through a lot of rubbish, of course, a lot of corrective movement before I see the next impulsive move. Now my trading duration is very much shorter term. And shorter term for me is I define that in days, maybe weeks. So for instance, a trade that maybe started here, I was just lucky enough. I thought it might have been a short-term trade. Well, it turned into a month-long trade. Well, they're the lucky ones. My medium-term view would be then weeks leading into months. I'm not an investor. I've tried that and I don't do a very good job of it. So I'm more like, and it's to do with my risk tolerance. I hate seeing open profits disappear in my account. So investors sometimes have to sit through large drawdowns. I don't. My trading basically has three strategies. Breakouts, and there's two breakouts that I just call them breakouts of horizontal resistance and then breakouts of a new high. So horizontal resistance might be something like this breakout down here in the very, very early days of this particular chart, this Lithium Explorer. Again, there's another long line of resistance here that finally broke out. These blue lines here signify breakouts of new highs. So buying new highs. You can see here there's 1, 2, 3, 4 of them. Possibly there's another one up here. My goal as a trader is to try and find the early ones, not the late ones. You get a much better risk reward if we find the early ones. I also trade pullbacks in weekly uptrends. In other words, once an uptrend is established, I may look at a daily chart to try and get into that weekly trend. That would be what I would call a pullback type entry. There's one here. There's another one here on the break of that sloping resistance line. And there's another one over here on the break of that sloping resistance line. Now reversals, I only look for reversals when the market has gone down. There's no point there's no point for me looking for reversals when the market is going up, because I should already be in the ones that are going up. If one particular stock hasn't gone up when the market has gone up, well, to me, that's not the type of stock I should be buying. So let me go to another chart. I'm using charts instead of Excel presentations. So what I'm going to do now is flip to a plain chart, and I will build up my indicators on this chart for you. I use a few indicators. Everybody likes to see a trend indicator on their chart. The most common trend indicator, of course, is the moving averages. I like to use something a little bit different, and it's called a Supertrend. I came across this in the Forex markets, but I think the Supertrend works a lot better on equities rather than the Forex markets. The Supertrend is a volatility-based trend. In other words, the trend starts when price moves a certain amount away from a swing low or a pivot low. So let's build up this chart for you and you can see what I'm talking about. Okay, well, I'm going to start down on the volume panel right from the start. I like to color my volume with up bars and down bars. Whoops. I also like them a little bit thicker than that, so let's make them a little bit thicker. I like to put a moving average on my volume pane, and we go to volume, exponential, 20-period moving average. And I can finish that. You can see it here. And that shows us, for instance, here's a consolidation in price, and our volume is tapered off. This is the sort of thing I'm looking for when price breaks out. It's nice to see long-term holders or shorter-term holders disappear, and then before the institutionals then buy in and create the next impulsive move higher. There's an old habit I've got. Whoops. and I keep an OBV on here. Where's OBV? There we go. Next, this is put that on the weekly chart. Styles would be orange. And this is again a volume indicator that's very well known. That's it for the volume pane, nothing much. Oh, you notice there's no titles here? Well, for titles, we go to the pane properties and show the title bar. That's it. Okay, so now we can see I've got volume, I've got moving average, and I've got my OBV. I'm very much a candlestick person, so I like to see the candles. So even right there, they look so much better than the other price bars. The up bars are hollow, and the down bars are coloured. Now the Supertrend indicator, I mentioned it was a volatility-based trend. So in other words, as soon as price moves, I can insert the indicator. Now, this Supertrend is not on this menu, the normal BullCharts menu. I picked up this Supertrend indicator from some code supplied by one of the BullCharts forum users, a very knowledgeable coder called Maximo. And you can see here, if I go to, well, let me just go to the builder, edit. Maximo from the BullCharts forum coded this, and I've merely used it very much thanks to Maximo. So what we see when we insert this indicator is we've got an ATR multiplier. For the weekly charts, I like to use 1.5. The period's 10. The method exponential. I like to use or do the calculations on median price. And this little feature here is something I really enjoy with BullCharts. I can actually paint the bars using this Supertrend indicator. Now that means I really don't have to have the lines on the chart. The bars will show me what the trend is. So let me finish this off. Immediately that goes to a yucky green color, but you can start to see the line is the Supertrend. And an uptrend is defined when the price gets above the Supertrend, and it's down when it goes below. So in order to make that stand out a little more, I can now color these bars using the Supertrend indicator. You can do this on many indicators. So I can now color my uptrends as blue and my downtrends as red, and apply that. Now you can immediately see how it highlights the trends very nicely. Okay, if I go to another chart, like I'm already on that one. Let's go back to our CXO chart. Again, you can see here, these are weekly charts by the way. I'm showing you the weekly charts. So you can see here that when price broke out, we got our first blue bar. There was quite a large retracement here, or a pullback, and then we're blue all the way up to quite high levels. So the Supertrend does a very good job of highlighting the trend. Now you can see the Supertrend line here. What we can do is, with this line, what I do is change it to red, turn the other two off, and apply it to my charts. And now what I've got is a very good trailing stop. Okay, so as soon as the price closed below this Supertrend line, it turned red. And then once it goes above, it goes blue again. So it's a very good, this indicator shows me the trends without the moving averages. I don't need the moving averages. Okay. Now, I mentioned this was a volatility-based indicator. If we change parameters So if I go out to say 3 times the ATR and apply that, you'll immediately notice differences. You can see that? By widening the volatility, we can now catch bigger trends. But of course, you've got to then put up with bigger retracements or pullbacks. So you can you can adjust that volatility parameter to suit your trading style. Now, like moving averages, there is no perfect number to use, only the best number that you want to see. And from experience, I know that on the weekly chart, I'm happy with 1.5. There is less volatility in the weekly charts than the daily charts. Okay, so the next indicator is, I said I was a price and volume observer. So my next indicator is one that I made up that shows me the high volume bullish bars. So if I insert this, I've created this buy signal. Here it is, P2. Styles, right, okay, buy signal, tiny, below, and no label. Now you can see suddenly that the bars where the volume is well above the average are highlighted for me. And it's interesting to see that these increases in volume occur mostly at the start of, they also can occur at the end of a trend. But what I'm interested, of course, is seeing them when they start at the beginning of a trend. Here's, we go back to CXO, and you can see this bar here now becomes a bar of interest to me for 2 reasons, or 3 reasons. It's a first blue bar, so I know we've gone off the low. It's got high volume, which interests me, because I know there must be institutional volume buying this, and that it's very, very close to a breakout level. Here's another high volume bullish bar, another one here. You generally see them on breakouts, and that's what you want to see if you're a breakout trader. So that's why that indicator is very of interest, of great interest to me. Now, when markets go up, what you find is you get a lot of up bars. And in an attempt to try and narrow that down, I use the relative strength. I'm trying to find stocks that are going up faster than the market, or the market index. And for that, I use a relative strength that has a moving average attached to it. So I use 21 periods. I'm happy with that. I put it on its own pane, and I want to see the fill. The fill is the most important thing, and we just increase the fill up to there. So now we see something like this. We get an indication that this particular price movement is going up faster than the XAO, or the market index. This particular pane, I want to move this pane. I move the pane up to the top of the page because I want to see, I like to see it up there. So when I'm thinking about whether this is a possibility for a buy, it's nice to know that the stock has been going up faster than the index. And that's what I want. I want my portfolio to be going up faster than the index, and hope that it doesn't go down faster than the index. We don't want that. The other indicator I use is an indicator made up to display Darvas boxes. Now, this is just merely an objective indicator that shows trading ranges. It settles on a high, finds a low, and then just merely makes a rectangular box. So if I insert that, there's lots of parameters, this particular one. I won't go through them because it will take too much time. But basically, I'm just merely saying wait for a pivot point with a high that's defined by a couple of bars. Give me a 10-bar breakout and just a smaller volume. What happens next is you get boxes on the chart. So now we've got a display of trading ranges. And as a breakout trader, I'm looking for ranges. I want to buy as price breaks out of those ranges. When the ranges are deep, I'm trying to buy a little bit before that because obviously I don't want to get in too late. So now what I'm going to do here is just merely reapply my template, and you'll see there'll be some minor modifications with that box. So it's just a little bit lighter. It's sort of in the background, but it's there. It's got me those levels that I'm interested in. If we were to look at it back on another chart, you can see lots of levels here. And my breakouts of new highs pretty much coincides with many of these boxes. Now, I mentioned that I was both a short-term and a medium-term trader. So on all occasions, I'm looking at two charts. I am looking at a weekly time frame to my left and a daily time frame on my right. Now, the daily time frame chart is identical, well, it's very similar to the weekly chart. The indicators are all the same. The Supertrend setting here is a little bit wider because there's more daily volatility. I'm happy with 2 SDs on this particular one, or 2 times the ATR. Now what you see here is, on the daily chart, this is the daily Supertrend used as a stop loss. What I've been able to do is add a second Supertrend on this particular chart, and this shows we go to advance. We can convert the time period to weekly. So what I can see on this chart is both my daily Supertrend and my weekly Supertrend. So quite clearly, I could see it over here on the left, but on the right, it's right there when I'm looking at it. So for instance, if we go back to say something like this breakout entry here, which again you can see over here, we're approaching a breakout level. I've got my first blue bar. I've got a couple of bars later, I've got a high volume bullish bar. I have a quick look down here. I know the weekly trend is going up without actually going over here and having a look at it. So that just saves me some seconds or a little bit of time. Not that I need seconds to make a decision. I'm not trading. I don't trade intraday. Generally what I'll do is I'll do these scans in the afternoon using the 3 p.m. snapshot that BullCharts supplies. That's probably why the volume component that I use for the high volume bullish bar is only 20%. I'm not seeing the total day's volume yet. We get a lot of volume near the close. So again, and we can also see here the Darvas Box indicator showing me ranges, which are very good breakout points. Again, you can see here, we got a retracement that turned the daily trend to red, but we still know that the weekly trend is going up. So why wouldn't I re-enter at this particular stage, trying to get a bit more of the run? We finally have a close below the Supertrend indicator, but yet again, being a coal stock and very in demand, it has broken out again and gone again. Let me just say, this can't continue forever, and I'm sure many of you are sitting there chuckling with me. We never know when trends are going to end, yes, I just don't like buying when they're right up the top of the chart here. Okay, I'm going to leave. I think that is almost about it for the indicators and the setup. Oh, there is one other setup on this particular chart And this little ribbon here is there to highlight the obvious for me. And the obvious here is the 8 exponential is above the 10 exponential, and that the stock is trading $500,000 a day for the last 10 days. There's no use me finding something that's going up if I can't buy it or I can't sell it. So I insist on at least that. So you can see here the indicator has gone green at the same time. We know our relative strength is going up. So if we go back to that day, or just around about that day, I'm starting to see green on all these time frames. If we go to another chart like okay, let's do this one. We can see here that this trend has been in a long-term downtrend, and suddenly on the weekly chart we see a high volume bullish bar. Okay, so that indicates there's some institutional involvement. We look on the daily chart, we can see the similar thing here. Now, while I certainly was not interested down here, I'm certainly interested up here, because we're now going up faster than the index. I've got my green highlighter saying to me, look for trading setup speeder. And that would be a worthy shorter term trade for me. I believe if you're interested in something like the Supertrend, the Rob can put the code in a Google Drive. Is that? I think that's what it is. I haven't got access to that, but Rob mentioned he could do that.
Yes,
Excellent.
Peter, that's true.
Okay then. So what I'm willing to do is then go straight into the scans. The scans now I set up in BullCharts. I want to find these first blue bars. I want to find these high volume bullish bars. I want to find when prices are going sideways, ready to break higher. So this is probably the most important part. Once you've set up the charts, you've sort of got to know what you want to do with them. Okay, so the scans I've got, here we go, edit. So now I'm looking for a couple of things. I'm looking for the first blue bar. I'm also looking for any instance of a high volume bullish bar. So I could do that with 2 scans, but I'm a bit lazy. I want to see them, but I want to see them all in one scan. So we have to create a scan that shows me just what I want to see. So I'm looking at this particular scan, looks for stocks trading greater than 1.5 million over 10 days. The last bar is an up bar, and that the close crosses above my Supertrend indicator anytime in the last 2 days. So if I don't do the scan one day, it'll come up on the next day's scan. And then I want the same thing with the signal bar. Now I've just increased the importance of the high volume bullish bar so I can get it on top of my scan. So if I apply that scan and run it now, this will be on today's data. Again, this is not financial advice. I don't want you guys to rush out and buy whatever's on the top of this screen. I'm showing it to you because I know there's not many after 2 down days in the market. Now I'm looking at the score here, and I want the scores. The scores with 40 are just the basics. They're the ones that I'm not really interested in. I'm only interested in results with a score greater than 50. Now, Robert's going to tell me that there is another way to do this, and that is you can sort the scan results by the score and then use descending. That will work. For some reason, I just find that ordering them via this menu is good enough. Okay, so let's have a look at the very first one on the list today, which happened to be Ansel. And we can see that a high volume bullish bar, clearly Ansel reported today. And so that's something that would not interest me from a trading point of view. It's coming up to an interesting level though, and maybe a breakout may or may not be imminent, who knows. The other thing this scan shows me is I find V reversals very difficult to trade. I don't trade them very much at all. But the indicator certainly showed when price moved off the low. So it was possible to use that as a trading signal on this occasion. Now, I am certainly not going to tell you that the first blue bar or my high volume bullish bars are going to win every time. Their track record is pretty poor, and you have to use them in context. You can see here, there's a high volume bullish bar, but price never went any higher. There's when trading gets sloppy, like this particular chart here, it's a daily chart. It's also an industrial stock, so that we're not going to get the explosive movements that we might see in some of the coal stocks or the lithium stocks, NHC. Okay, coal stock has been going up on the weekly chart for quite a while. Had a pullback, knocked it out of the weekly trend on my chart, but got back into it again straight away, and then it's gone even higher still. So going back to this scan, what else is of interest on this one? It was very interesting that we've had 2 down days in the market, and yet we've got a lithium stock here that's had 2 strong up days. If we were to have a look at this scan, on the same scan result, we've got another lithium stock, which also made a high. So doing a scan like this, you get a very good feel for what's moving in the market. If there are sectors moving in the market, there are no gold stocks, there are no lithium, no graphite stocks moving at the moment. Copper stocks have started to move, but only because of the BHP's offer. Coal stocks are definitely moving. So we've got coal stocks here leaping higher. Now, when I see a high volume bullish bar up at the top of the screen, it doesn't interest me. We have to put them in context. Just like every first blue bar doesn't interest me. I'm only interested in the right context. In order to help me out with that, I have a written checklist in front of me that guides me to try and find the ones with the better outlook, so we say the higher probability. If I were to see a first blue bar on a more speculative stock, the checklist says go and check the fundamentals. What does this company actually do? Does it have any money? Can it continue? All that sort of stuff. It's routine common sense, but it's written down so I try not to forget it. This particular little stock here, Mineral Explorer, has suddenly burst out of the blocks. I'm only showing you this to show you that this chart would have come up in the scans on this first blue bar day. It would have come up in my scans again on this day. It would have come up in my scans here as well. So in other words, BullCharts is doing the job that I want it to do. I want it to present to me the charts where the events that I'm interested in are happening. And BullCharts does that very well. Here's another little stock, DRE, which a few of you will know. Again, BullCharts put this stock code appeared in my scans on this day as well, but I ignored it because, hey, it's a spec stock. Now, once you get two high volume bullish bars in a row, you know something's happening. And then when it went sideways for quite a while and then broke out again on a high volume bullish bar, BullCharts did its job and showed it to me. Unfortunately, I didn't take any notice of BullCharts on this occasion, but that's just the way it goes. We can't trade them all, and we're not going to get them all. Another particular stock, I wanted to show this one because, again, I've got this green signal here, which tells me, okay, get serious, Peter, look for your setup. One of my setups is a shallow retracement, in other words, a trading range that goes sideways. And get ready, put your orders in when it breaks out. And on this particular occasion, it worked out okay. They don't all work out okay, as we know. Here's an occasion that regulation breakout didn't go very far at all, and I'm out of stock now because the market is now going down. So I'm not going to give this any more room, and I'm out of it. If now that the bars have gone red, I can ignore this chart now, knowing that BullCharts will tell me, it'll come up in my scans when the price triggers the Supertrend indicator again, or we get a high volume bullish bar. I've also got the scan to show me those Darvas boxes. And there's a few in the market at the moment, not many because we've had a couple of down days. But let me just show you a few here. We've got, okay, here's AAC. Again, prices are now just drifting lower. Adore Beauty. Again, I wouldn't be looking at something like this. I want something. Where's one that's interesting? Okay, this is interesting for the reason that I'd like to find setups occurring quickly. In other words, before the trends get well underway. And so that I want to find these first boxes or the second boxes. I'm not really interested in the third, fourth, or fifth. And we can get a series of higher highs on some stocks. Here's a stock of interest at the moment. Although, again, with the market going down, it may not break out for quite a while. So that's basically my presentation done. I hope I've shown how I'll set up the trades to coordinate my trading. And then I hope I've shown that the scans can find the charts at the right time for me. And that's BullCharts. That's why I use BullCharts. It becomes a tool in my trading business.
Yeah, Peter, very good. Very good. Thank you. You've covered a lot of good snippets and tips all the way through there. I'd really like to see it all again, but I'll have to wait for the video recording. Are there any questions? Right. Any questions around the table of Peter?
Yeah, Peter, Alec here. Thank you very much for a terrific presentation. One thing that I think I missed along the way was the ribbon that you're using with the pink and green. Would you just mind expanding on that again?
Certainly, Alec. It's a new addition, and it's there to make me concentrate on shorter term opportunities. So it's there on this particular chart. Is not a particularly good one, although we don't know at the time. But when this ribbon goes green, I know that the exponential moving average, 8 exponential, is above the 10. So in other words, it's a fairly strong trend, but it is fairly new, because these period numbers are fairly low. but also I've got a volume component in there too. So the stock must be trading at least 500,000 shares to interest me. So once that appears on my chart, I'm now looking for a short-term setup, which could be a breakout of a box. So once this appears on my chart, I put them in the watch list, and I may put them on a watch list, and I might say, well, for instance, okay, BullCharts Steel is on my watch list. What have I got here? IMD is on my watch list. The price is up. There's enough volume traded. We're getting close to breaking out of this corrective pattern. We're bouncing off a long-term support line here on the weekly chart. So that's of interest to me at that particular stage. That green box merely signifies the Fibonacci retracement from this whole move up. The 50 to 61% I use quite often. And here's a little tip for people. So even though I've got my Fibonacci tool, I'm using the GAN functionality to get my Fibonacci tool. So you can see here that IMD has now come back into this 50 to 61% zone. If they go below 80%, I am not interested. I'm saying the uptrend is dead because I want to see a higher low. The indicator also has some extensions up here for me, so that gives me an idea of, say, price targets. The other thing is I've used the Fibonacci retracement tool as a guide. Whoops, this is probably not a good chart. We need to go to something that's gone up a bit. Let's just say, oh, that's not a good chart either. Only because it's very spotty. It's not something I would be looking to trade. Okay, here's one. Here's a graphite spheres resource. If I was interested in this particular stock, I would buy it at, say, 23, 23.5. So where does it have to go in order for me to get a reasonable return? Well, on this one, it's fairly easy. I can go back to the previous highs. But I can use this Fibonacci retracement to say, look, if I buy up here and I put my stop loss, say, or maybe down here somewhere, this gives me my 1-to-1. This gives me my 2-to-1. And so on. So if price happened to get up to 45 cents or 47 cents, it would give me my 5-to-1 on the trade. So I can use this. Let's expand this and say, well, look, okay, if price went back to the old high, I'm getting about 2-to-1 for my trade. So that gives me an idea. Okay, so I've shown you a bit extra there, Alec. Hope you don't mind.
No, that's terrific. Thank you, Peter.
But the ribbon is mainly there to say, hey, Peter, wake up, get ready. Okay?
Yep.
I'm happy to look at charts if people want to throw in some stock codes, which is one of the other points on the agenda.
Yeah, Peter, have a look at Victor.
Okay, petrol jet engine supplier in Geelong. And we can see, yes, look at that, nice little breakout. If I was interested in that one, a buy at 200 or 280 and a stop loss down here at 260 would be fairly tight. If we go back to the old highs up here, it's a nice little result for me. Okay, follow all that? Again, that's my shorter term style. I'm guaranteed, at least if it goes back to the old highs, I'm guaranteed up here about 1.5, which is my minimum acceptable amount. But if we're looking at on the weekly chart, we're still in, we've had this impulse up, we're in this corrective phase at the moment. So right now, in the long term, we're in this big correction. And let me just highlight it how I normally highlight it. I just use these. Oops, hang on. I don't want an orange box. I want just the orange lines. So I say, okay, I know I'm in this. When I'm looking at it on the daily chart, I say, well, look, I now know I'm in a corrective phase. If I'm interested in buying this stock, I want to try and buy it at the lower level of this rather than the upper level. So that's why this sort of thing here would be attractive to me. Okay. Any others?
Peter, I've got a question about Darvas Box.
Yes.
I'm wondering if the parameters you've got on your Darvas Box are the default ones in BullCharts, or can you quickly run through what parameters you've got set?
No, they're not the default parameters. Okay. Yes, Darvas Box. Okay. The Darvas Box starts off by defining a top. And we have a parameter that will, the Darvas default is 3. So in other words, we need to see 3 lower highs before that top is defined. Same thing goes with the bottom. We need to see, let me just enlarge this so you can see it a bit clearer. Number of bars, 3. So we can see here, here's our high, 1, 2, 3. So that's how it marks the high. The bottom also needs 3. So once we've got a bottom down here, 1, 2, 3. So it's only until the end of this bar does that box become defined. Now, charting software has included a stop loss percentage. Darvas himself didn't use this, but when Darvas was trading, the markets were a whole lot less volatile than they are now. There were no robots, there were no algos, there were no creepy Wall Street bets living in the background, so that the charts were a whole lot less. There's a breakout period. Darvas himself uses 250 days. In other words, he was only interested in yearly breakouts of yearly charts. I've merely shrunk that down to 10 days because I like a quicker approach. Along with the Darvas parameters, Darvas himself said that he wants to see volume increasing before the box. And BullCharts have programmed some volume parameters. I, again, modify them. I don't use these very often because I want to try and lessen their impact in the Darvas selection. So I haven't looked at these too closely. They're not the default, but I've tried to lessen their impact. The main 4 parameters are the ones on the top that define the box. Okay. Is that helpful?
Yep, very good. Thank you. No more questions.
Oh, excellent. Well, I hope you've all enjoyed that segment.
Peter, I think it was very insightful, and as I said before, I'm going to be looking forward to looking at the video recording.
Well, thank you, Robert.